As a 40-year-old, if you're a 30-year-old, I'd say invest in yourself, start a business. You'll get a higher return on your investment than anything else, whatever that business is. Because if you were to put that 30,000 euros, and let's say you want to start an artisan bakery, you can probably generate from that 30,000 euros, 30,000 euros a year. It's 100% return. People don't think like this. Yes, it requires effort.
Yeah.
So you have to factor in your time. But at 40, that's exactly the difficult age to decide, okay, what is it? Problem is there's negative return in banks, a probable negative return in the equity market, in the developed equity market, and bonds as well, and credit. So real estate generally will work in this environment over time, and maybe a recession is a good time to buy real estate if you've got cash. It's probably a good time to get debt if you are 40 years old, because if there's debt forgiveness coming or inflation at the end of it, debt gets eroded away. So buying a property is a good option. Or if you want to set it and forget it without managing it, then I would say emerging markets are a pretty good place to be, considering so many of them, particularly around India and all of the countries around, whether it's as north as Iran, if you want to be risky, as far across as Morocco, down to Indonesia, Malaysia. All of those countries have like average ages of 30 or less. Astonishing. So, and they have low debts, high savings, right? So that is the opposite of the world we have in the developed world. So
I presume you have ETFs in mind.
Yeah, ETFs in India or some of these countries, and I think that will do well. And if you also, I would also allocate maybe a little bit to gold. I think you will get a commodity cycle at some point, but gold is fine, that'll work. And then a bit to cryptocurrency as well, because I think that's the future.